Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Friday, January 29th, 2010. Well, another fairly large red-bodied candle today, and quite a bearish candle for today's trading. Fairly similar type of candle to the previous day's trading, except we have the long shadow on the top of the body of the candle rather than on the bottom of the body of the candle. And that's what makes this candle quite bearish today, the fact that the market has closed down towards the low. That tells us that the sellers have closed this market in control, and they showed some commitment to taking the market lower. Between the open and the close, we can say that the sellers have made some solid net bearish progress on the day as well. The sellers are also keen, and we gauge that by the distance that the close is below the previous close. So quite a bearish day and a bit of an extension to the size of the body as well. So the sellers have made even more net bearish progress than the previous day. Significantly, the market took out the 1080 level of of support with this fairly solid bearish close. So that could be significant for this market. One thing that we need to be aware of is that the market is trading right at the bottom of the cloud or the Kumo. So the bottom of this cloud will offer more support for this market potentially. The market is closed just at the bottom of the cloud. It tried to trade outside of the cloud, but the buyers came in not in any great force, nor with any strength, and the sellers maintained that control and commitment that they had throughout the day. We have a continuation of the trend in the first time frame with the lower high and the lower low as well, so everything is looking fairly bearish for this market. The only saving grace, as I said, will be potential support offered by the cloud. If that cloud fails, and if we have a solid close down below the cloud, then the market won't find its next support until down around the 1041 level. So there was a previous level from some time ago, and the market reacted around that level previously as well, so there's a zone of support down around there. With this shadow on the top, that's telling us that the buyers did try to take control of the market throughout the day, but they failed to show any commitment to taking the market higher. The sellers came in force as the market tried to trade up towards those highs and roughly around this area where there was previous major downside rejection from within the cloud here. We need to watch that low of the current candle for a solid bearish close for a continuation of the downtrend, and look to the highs here and certainly the top of the cloud if there is any potential for the market to trade up above this 1100 region. Now the market is trading within the cloud still, or maybe just only slightly below, but we'll say that it's within the cloud, so the market is fairly neutral. And the market is trading down below the Tenkan Sen and Kijun Sen, which means that the market's bearish in the short-term and medium-term time frames. We haven't had a crossover of the Kijun Sen or Tenkan Sen below the Kijun Sen yet. That would be a bearish signal. If that occurs up above the cloud, then it's only a fairly weak signal, so we need to take that into account if we're going to take any trading signals from the crossovers. The Kijun Sen and Tenkan Sen are trading at the same level at the moment, 1,111. And if the market does rally, then there's potential support around that area from those two indicators as well. So an interesting day's trading coming up at the start of next week. If we have any solid bearishness, then there is potential for the market to fall another 40 points. So anyone that might be long in this market might want to think about taking profits, raising stops. Shorts might consider short-term trades down to roughly around that 1040 level if there's a solid close below.